Everything you need to get set for investing in the Dar es Salaam Stock Exchange this week, straight from the city of Dar es Salaam. Good morning, everyone. This is A Trader DSE Weekly Update. We appreciate your tuning in. We really do. Now let's get straight into it.
Let's start with the most liquid shares. Now, these are the shares that were the easiest to buy and sell last week, and they include the following. At number 1, we have the Dar es Salaam Stock Exchange, accounting for 34.1% of the total volume traded for the week. At number 2, we have CRDB Bank, accounting for 33.4% of the total volume traded for the week. And finally, at number 3, we have Nicole, accounting for 9.4% of the total volume traded for the week. Now, last week, the all-share index closed at 1,833.97 on Friday, which is a 1.24 decrease compared to 1,862.42 on Monday. Now, this fall was mainly contributed by the fall in share prices, especially from companies in the banks, finance, and investment sectors, of which we shall look into shortly. Now, getting into these sectors that had different price changes, Nicole shares have shown an appreciation in prices last week, perhaps because investors might have seen this as a good time to buy the shares compared to when their shares were trading at a peak of 610 shillings on April 13th. Now, this price of 350 is a 42.6% discount compared to when Nicole was trading at its peak of 610 shillings. So investors might see this as the right time to buy into the stock. And it is also worth noting that there has been a bullish trend with these shares in the last 3 weeks, as they have appreciated by 6.1% from 330 on June 1st to 350 as of Friday, June 17th. So this shows that investors' appetite for the shares is starting to pick up. Now, moving on, we have DCB and CRDB, which have shown quite a significant drop in price last week. With DCB, the reason behind this might be due to the fact that after the annual general meeting, which was held last week, there was no dividend that was recommended and approved. Investors might have not seen the reason to continue holding the stock, causing lots of supply for these shares in the market, which may have led to the fall in price. Now, with CRDB, the reason behind the fall in price could be that the company has already reached its ex-dividend period, and as a matter of fact has started paying out its dividend as of last week Monday, meaning that short-term investors who were there for the dividend are now selling, and those who want to buy want to do so at a discount price, so they won't be getting any dividend this year, causing the share prices to drop. Now, moving on into the industrial and allied sector, TCCL has been the only price gainer of last week with a 1.35 increase in share price compared to the previous week. Now, the reason behind this could be that the investor appetite towards this stock might have grown last week, especially even at this price of 1,500. The company seems to be trading at a discount of 17.5% compared to its price of 1,820 as of June 1st, hence looking like it might be the best time to buy these shares. And now, finally, we're getting into the commercial services sector, where Swissport shares have been showing a bullish trend this month, as they have appreciated by 12% from 1,000 on June 1st to 1,120 on Friday, June 17th. Now, the reason behind this appreciation could possibly be influenced by the fact that their shares trading, right now they're trading in their come dividend period up to the 14th of June. So demand for these shares have been quite high as of these last 3 weeks. Now that we're in the ex-dividend period, do you guys think that the shares are going to start falling in prices? Give us your thoughts in the comment section down below.
All right. Let us move on to Treasury Bond trading, where last week there were only 3 trades in total for the Treasury Bonds offering the new coupon rates. And this is because these new coupon rates are much lower than the old coupon rates, as seen in this table over here. And even with the Treasury Bonds with the old coupon rates dominating in terms of value traded, we've seen a slowdown in the value of bonds traded, as they've declined by a 58% drop from a weekly trade of 70.37 billion Tanzanian shillings 2 weeks ago to 29.78 billion Tanzanian shillings last week. This might be because most of these long-term treasury bonds with old coupon rates, such as the 15-year, 20 and 25-year treasury bonds, which were the most traded last week, were mostly trading at premium prices, causing the buying bondholder to gain less of a return. Let's have a look into each one of these bonds in terms of prices, coupons, and their respective yields. The 15-year Treasury bond were traded at premium prices, with the most expensive one being traded for 125.8954. The 15-year Treasury bond offering the old coupon rate exceeded the new one by 17.41%, and this led to the average bond yield trend that took place during the week. The 20-year Treasury bond were traded at premium prices, which were actually much higher than the 15-year Treasury bond, with the most expensive one being traded for 137.4561. The 20-year Treasury bond offering the old coupon rate exceeded the new one by 21.89%, and this led to the following bond yield trend that took place during the week. And finally, we have the 25-year Treasury bond, which were traded at the highest premium prices, with the most expensive being traded at 141.9521 Tanzanian shillings. It's also worth noting that there was a super rare discount trade that took place on Wednesday at a price of 99.999, or a 0.0001% discount on the bond's face value. The 25-year Treasury bond offering the old coupon rate exceeded the new one by 21.25%, and the traded prices led to the corresponding yields we can see in this graph over here. If you've noticed, these bonds with the higher coupon rates to offer were traded at more premium prices, and this is because most investors prioritize high cash flow returns over the overall profitability of the bond, which is the reason why they're willing to purchase these bonds at very expensive prices, even if it means them receiving a capital loss. On the 22nd of June, there's going to be an auction for a 20-year Treasury bond offering a coupon of 12.10% every year, and here are the details. The amount on offer is 130.32 billion Tanzanian shillings, and the minimum bid size starts at 1 million Tanzanian shillings. The last time a bond like this was auctioned was on the April 13th, and it was oversubscribed by 45.29 billion Tanzanian shillings. Being oversubscribed means that investors came forth with way more money than the government needed, and this was largely because investors in the DSE prefer to invest in longer-term Treasury bonds, which offer higher interest, such as this 20-year Treasury bond as well as the 25-year Treasury bond. The minimum price to go through was 100 Tanzanian shillings, which was a par value, as people are willing to pay the exact face value of the bond, which is 100. And over here we can see the timetable showing the upcoming Treasury bond auctions that are going to take place in the new government fiscal year of 2022-2023. And with that said, thank you for choosing A-Trader as your partner to financial freedom. Don't forget to follow us on our social media platforms to keep you updated. Also, don't forget to check out our website at www.atrader.co.tz. Have a great week ahead, and karibuni sana.